Hello guys, welcome to another video. First, I want to thank you everyone for supporting my channel. Please guys, if you have any questions around the videos, let me your message. So guys, in this video we're watching 7 stocks companies who make monthly dividend. So guys, let's see who's those companies. In the number 7 guys, we have the Main Street Capital Corporation with 2 billion market cap. In the 52 weeks, the low price was in the $14 and in the high price was $45. This company giving a monthly dividend 0.21 cents in the monthly per share. His 80% 0.8 dividend. He's giving $2.46 per share in the year. The last month was in the green. It's a good company. So I'm gonna let you now to hear a message about this company. After we're going to the next, to the number 6. So hear the message guys.
Main Street Capital operates as a business development company, which means it makes money by providing financing to privately held companies. It focuses on lower middle market companies, generally defined as those generating between $10 million and $150 million in annual revenue. As of June 30th, Main Street's investment portfolio consisted of 177 companies, with no individual investment representing more than 3.7% of total investment income. Main Street's investments typically support management buyouts, recapitalizations, growth investments, refinancing and acquisitions. The overarching business strategy for Main Street is to earn a higher rate of profit on its investments and returning significant cash to its own shareholders through dividends. The company has never decreased its monthly dividend rate and in fact has grown the payout steadily over the years. For example, Main Street's.
So guys, that was the Main Street Capital, the stock company. I'm give you some statistics about this company. Now guys, we're going in the number 6. In the number 6 guys, you have the Choice Properties. This is the from Canada company. Another company who's giving a dividend, a monthly dividend. She's a good company guys, with market cap $9 billion. 52 weeks, the low price was $10.58 and the high price was $15. The price now it's $12.61. He's good company guys. In the good position of the price. So guys, now I'm gonna give you another voice message from this company.
Choice Properties invests in commercial real estate properties across Canada. The company has a high-quality real estate portfolio of over 700 properties, including retail, industrial, office, multi-family and development assets. Over 500 of Choice Properties investments are rented to their largest tenant Loblaw, Canada's largest retailer. On July 20th, Choice Properties released second quarter results that showed resilience during a difficult operating environment. Funds from operations, a highly crucial measure of cash flow for REITs, declined 19% from the same quarter last year. The decline in FFO per diluted unit was largely due to a higher weighted average number of units outstanding, as well as the disposition of a 30-property portfolio. The trust is also assisting smaller tenants with rent deferrals for 60 days as well as by participating in the Canada Emergency Commercial Rent A.
So guys, that was the number 6 choice properties. Another good company. Guys, these companies, it's how I make that 7 companies. It's very great company for people who want to make a dividend every month, with a very good market cap, with very good stuff in the company. So guys, his company have the great future, have thinking statistics to make great worth in the next years. Is safely companies. So guys, now we're going to the number 5. In the number 5 we have Dream Industrial Real Estate Investment, another company from Canada. We're talking about the company market cap around $2 billion. Last 52 weeks the company in the low was $6.89, and the high position before pandemic it's $14.31. He's giving dividend 6% and 13. We're talking about the 0.70 cents. It's a great company, guys, with a great price. He's in good position, guys. Now I'm gonna give you the voice message about the company.
Dream Industrial REIT owns high-quality light industrial properties. The trust owns and operates a portfolio of 262 geographically diversified light industrial properties, which makes up 26 million square feet of gross leasable area across Canada, with some operations in the United States. The trust's portfolio includes roughly 63% of its gross leasable area in multi-tenant buildings and the remaining 37% in single-tenant buildings. Dream Industrial currently has a focus on driving occupancy and rental rates, furthering its leasing operations and internal growth. Occupancy stood at 96% as of the second quarter of 2020. Further, as of September 4th, Dream Industrial had collected approximately 98% of recurring contractual gross rents due for the second quarter in July 2020 after adjusting for agreed-upon deferrals in Canada Emergency Commercial Rent Assistance. Similar to Stag Industrial.
So that was the voice message about the Dream Industrial REIT. Now guys, we are going to the next company. It's the TransAlta Renewables Instruction, another company with a monthly dividend. We are talking 50 weeks. The low price was $10.82. The high price on $18.25. We're talking company about the $4 billion and 22 million, with a very good dividend, 5% and 89. We're talking about the 0.94 cents. Very good company, guys. The price now is $15.84. Another good company for people who it's a long time investors, dividend investors. Taken the voice message about this company.
TransAlta Renewables is a top pick, as the stock not only pays a safe dividend each month, but it also provides investors with long-term growth potential. TransAlta Renewables is a renewable independent power producer based in Canada. It has a diversified portfolio of assets including interests in 23 wind facilities, 13 hydroelectric facilities, 7 natural gas generation facilities, 1 solar facility and 1 natural gas pipeline. In all, the company cumulatively has an ownership interest of over 2,500 megawatts of generating capacity. Its assets are spread across the US, Canada and Western Australia. Therefore, TransAlta Renewables could be a particularly attractive stock for investors given its exposure to renewable energy, a long-term growth industry. TransAlta has a successful track record, as its annual cash available for distribution, CAD, has more than tripled since 2014.
So guys, that was a voice chat about the TransAlta company from Canada. So let's watch the number 4 now. We're talking about the Show Communication, another company from Canada, another great company. In the 52 weeks, the low price was in the $17.75. The high position was $27.69. Market cap $12 billion and the 47 million. The price now it's $24. Very good company with a great dividend, 4% and the 79, $1.19 per share. Great company, guys.
Shaw Communications is a major communications company based out of Canada. It has become Western Canada's leading content and network provider, with over $4 billion USD in annual revenue. The company delivers wireline and wireless services to consumers and businesses in Canada. The wireless business operates under the Freedom Mobile brand. Shaw Communications is uniquely positioned to succeed in the current environment. While many industries are under heavy stress due to the coronavirus pandemic, demand for wireless, video and broadband service only continues to rise. For example, in the most recently reported quarter, Shaw Communications' consolidated revenue decreased by just 0.8%. Meanwhile, adjusted EBITDA increased 15.3% year-over-year, while postpaid churn rate was a record low 0.96%. Average revenue per user increased 2.6% for the quarter, over the first 3 quarters of the Q.
So guys, that was the voice chat about the Shaw Communication. Let's go to another company. We have the Stag Industrial, another very good company with monthly dividend. The price now it's $31.64. In the last 52 weeks, the low price was $70.57. The high position was $34. The market cap it's $4 billion and the 72 million. We're talking, guys, about the very big company and the very good company. Every number is in the green. It's a very good company, guys, with people who's long-time investors, with dividend investors. The numbers, guys, it's very good. The stuff, it's very big.
Stag Industrial is a safe dividend stock because of its advantageous business model. Stag Industrial is a REIT with a particular focus on industrial real estate properties, many of which have exposure to e-commerce activity, an especially attractive feature for long-term REIT investors. Many REITs are highly exposed to areas of brick-and-mortar real estate that are in distress, such as malls. These property types were already under pressure entering 2020 due to the rise of e-commerce retailers such as Amazon, Nasdaq, AMZN. The onset of the novel coronavirus pandemic only accelerated secular e-commerce trends. As a result, Stag is an excellent stock for REIT investors looking for long-term growth potential. Stag Industrial's property portfolio included 457 buildings in 30 different states as of June 30, 2020. According to the company, approximately 43% of its property portfolio handles.
That was the voice message, guys, about the Stag Industrial. So guys, now we are going in the number 1 and the best company for monthly dividend, the most safely company in company like Dividend, company like that. We have the Realty Income Corporation. The price now is $62. So guys, in the last 50 weeks the price was the low price was $38 and the high position was $84. We are talking a company with $21 billion and the 51 million. Very big company, guys. Very big number of the years in the stock market with a very big worth. You are watching here back in the 1994. The price was $8, and now, guys, we're talking about the crazy worth. Of course, guys, I'm talking about the long-time investors. The company give 4% and the 35% dividend, $2.80 per share.
Realty Income is the safest monthly dividend stock on this list due to the company's long history of consistent dividends. The company has paid 602 consecutive monthly dividends without interruption, a track record stretching back more than 50 years. It's no surprise that Realty Income has trademarked itself as the monthly dividend company. Realty Income also has a long history of consistently raising its dividend over time. Realty Income has increased its dividend 107 times since its initial public offering in 1994. Realty Income qualifies as a dividend aristocrat, a group of 65 companies in the S&P 500 that have raised their dividends for at least 25 consecutive years. Since its initial public listing in 1994, the company has increased its dividend on average by 4.5% per year. This means Realty Income has delivered consistent dividends each quarter and provided dividend growth for.
So guys, that was the voice message about the Realty Income Corporation. We're talking, guys, about the best company for the monthly dividend. It's a company with very good numbers. We're talking, guys, about the really company who lot of investors have this company in her portfolio. So guys, that was the number 7 companies with a monthly dividend. I think it's a very great companies, guys, for the long time investors. The investors who want to make the monthly dividend, investors who are watching in the future, for the next 10 years. So guys, thank you for watching my video. If you have any question about this company, please let me your message. Of course, I'm gonna answer you. Again, guys, thank you very much. Goodbye.